Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back at it again with another portfolio update covering the month of January of 2026, the first month of 2026, starting the year off the way we start years off when we're in highly volatile assets, just up, down, around the corner, moving, grooving, gliding, sliding. It's crazy out here in these markets. We're going to give an update of how we did over the month of January. So strap in. Let's get ready to get to it. And hopefully you guys pick up some gems to help you on your financial journey as I document mine. Obviously, this is not financial advice. This is a documentation of my financial journey with my money, my results, my receipts. Before we get into the episode, let's go ahead and make sure we hit that like button. If you've been here more than twice, especially, hit that subscribe. Go ahead and give me the subscribe, man. Like, the numbers make me feel good. Lastly, share the video. Throw it out there. Get me into the algorithm so that people see it, because then people come in and like check us out, see what we're doing over here. We're not trying to get rich by ourselves. So let's go ahead and jump into it. I'm going to bring to the screen. Let's see. How do I want to do this? Do you want to put me behind the screen? We'll go Micro Machine on this one too. So that way everybody gets to look. So obviously the portfolio is sitting at $43,584.80. And the reason I say that versus the number at the top of the screen, which is 45, which would make me feel a little bit better, is I do not count the family funds. So these are funds that I'm starting to set up for my cousin's kids. To kind of help hopefully change the way that our family functions moving forward as far as how the wealth distribution goes within the family. And you can't expect other people to do what you can do yourself or what you're not willing to do yourself. So, you know what? Being the catalyst that I am, the rule breaker that I am, the black sheep of the family that I am doing stuff for people outside of my immediate family. Also, I don't have kids yet. So there's that too. So I kind of moving forward, having systems in place, it's good to experiment on somebody else's kids as opposed to having an experiment on your own, right? So processes and procedures. So I only count what's in these four accounts, one of which has 92 cents. I don't even know how 92 cents got in there because I don't use it. It's called failure fund for a reason. But these are the accounts that we're going to be going through today on the traditional finance side. Let's see here. How do we want to go about this? Oh, yeah, banners. That gives me the order. So first and foremost, we're going to go take a look at the in-home banking. This is actually going to be converted into a fund that will, at a certain point, house specific bills that are reoccurring. So right now we're currently looking to get our cell phone bill covered, which is roughly, at current rate, about $780 a year. I'm budgeting for $1,200 a year because most phone bills are around $100. And that's what I'm going to budget out. Obviously, I do not have to have the latest, greatest, grooviest name brand. As long as I'm on the carrier that I prefer to be on T-Mobile. I use Mint Mobile. I pay by the year. It's pretty inexpensive. So that's the metric that I'm gauging on, is factoring in a $1,200 a year phone bill. And once we get this position, which is YBTY, to that amount, we will move on to the next bill. But eventually, this account will encompass the savings, any additional house savings we have is in here, and it'll be specific individual bills that have to be paid on a monthly basis. That's kind of what we're going for. We're building up this year. Hopefully the bills that we've targeted for this year will hit those metrics, and then going into next year, that will start getting paid out of this account. We are running no margin over here. This is a cash value account, so whatever it produces is what we have to play with. Not a whole lot goes on. It's pretty boring. Finances should be boring. Well, keep it over here. We'll keep it on this because then I can switch between them. Moving on. We've got our long-term holdings. Now, we have had some updates go on in the long term. Long-term holdings, we fought our way up. We are above $2,000 in the long-term holdings. How did we get there? What did we do? What were the moves? What were the actions? Well, a lot of it is Bitcoin. When Bitcoin dips, all of our additional Bitcoin exposure is housed in this account. This account is running pretty much flat now that we're buying in it regularly, which is pretty nice to see. So we have our Bitcoin exposure, long-term holding, and a couple of moonshots are living over here. Obviously, we've made a massive jump in our ASST position, which every time Bitcoin dips below 90,000, we buy a little bit extra in this. An additional 10% comes off of that fully invested W2 money, gets hashed into this portfolio specifically. And most of that goes into ASST. We are also buying more shares of 21 Capital, but our ASST position is the first one in line because Alphabet. And we are at 565 shares now. Our target is 1,000 shares at under $1. Now, I'll tell you this, as long as we're under 90 cents, I'm not going to stop buying this. So there's a good chance that we might break through the 1,000 share mark. I'm buying everything that I can get my grubby little hands on under 85, 90 cents. And I'm just going to leave it at that. Now, if we get back up, because, Bitcoin, you wait a couple of weeks. It's like the weather in Kansas City. Wait 2 weeks is going to be something different. If we bounce back up and we get back to where we're flirting around $1 where we were, that is totally fine by me. I will just be stopping my purchases actively at 1,000 shares. And I'll get my 1,000 shares. As long as I can get them with an average buy price of under $1, I'm happy with that because I'm not going to look at it for probably about 5 years. That said, I'll be buying every dip. Every time we get below 90 cents, that money spigot turns back on, and it's something that I'm looking at. Right now, we are in buy range. Current price at the close of the market on Friday, which was basically the last market day of January, we were at 82 cents. I bought some. We dipped down into the 70s. I bought that dip. Hopefully, they're buying this Bitcoin dip because I'm buying the Bitcoin dip as well. Next up, we have BFGFF, which is our moonshot. It's a mining corporation. I have not bought any more of this. Reason being is there's an additional fee to purchase this thing that I did not realize, so it throws my buy prices off. So we were planning on throwing $100 at this and looking away. I'm going to have to wait until I have an extra free $100 to just throw in here, because at this point, I'm like, I need a little something to make it interesting, especially since I'm paying a little bit extra. There's a service fee on this purchase. Don't follow me on this one. This does not. It's a moonshot. We'll see where it's at in 12 months. And then gauge. I'm always looking to get my initial investment out on my moonshots as many times as possible. We'll see what it looks like. Next up, we have MSTR. We are working on getting our 10 shares. We have a target of 10 shares. I am actively looking. The Eye of Sauron is on MSTR. And the way that this worked out was I was able to buy a share without liquidating any of my MSII position. So that was free to continue to compound, which I am perfectly fine with. And we got to pick up a whole share before buying the ASST and the XXI. Next, we have our SCW. We have a share. We will have 8 shares. The market, we haven't had an actual market day. I'm recording this on February 1st, so it's a Sunday. Tomorrow, when the market opens, I will be moving funds over to purchase my 1 share of Charles Schwab Corp. Simply put, I believe in buying the platforms that I'm using, especially the financial ones, because I'm like, if I'm using it and I'm having a decent enough time with it and they're making money off me, I want some of that money. Like, they pay a dividend and we have it set to drip. So I want my money, because some of that money is money that I paid them. So I want some of it back. So we'll be buying another share. So we'll be sitting at 8 and some dust. And then next up, we have SoFi. We have 3 shares. We've made 3 payments on that loan, getting ready to make the 4th. As soon as market opens for February, we will be buying our commemorative February share of SoFi. Again, using the platform, we've got a loan out for $35,000 from them. They're making money off me. I want some of my money. So yeah. So SoFi is one that we're using. Their platform, really interesting, really fast. That was the most amount of money that I've gotten that fast ever. So that was cool. I like the platform. It's auto pay. It's kind of a set and forget. I've got, let's see here. Was it 24? So as of February's payment, it'll be 20 months left for that loan, part of which we used to purchase a vehicle, part of which we're using to fund our portfolio, which is in turn now paying that loan back. And yeah, since I was doing that, I figured, we're going to have 24 shares of SoFi and we'll let it ride. It's a financial tool that I'm using. It's good. I can't complain about it. I have no complaints. Like, I needed access to capital and they gave me access to some semi-cheap capital, and the rest is history. It's super easy to pay them back. I like that. And yeah, so they give you discounts for setting up autopay. Pretty awesome. Next up, we have Tesla, which is another one. It's technology, and they do have Bitcoin on the balance sheet. Looking to the future, that is one company that I am going to be long on. And it's Bitcoin. It has Bitcoin on the balance sheet, but doesn't move with Bitcoin because they do way more than just hold Bitcoin. So that's awesome. XXI, we have a video coming up this week on my thoughts on XXI and how it fits into my strategy. We bought a few more shares, obviously, from when they launched, when the SPAC went live. We're down quite a bit. Well, Bitcoin's down, but also this company is not just a Bitcoin treasury, it's a Bitcoin company. And, people are getting hype and excited, and there's a lot of speculation around what they're actually going to do within the space. And I'm here for it. That's kind of it's a moonshotty play, but it's also at a price point to where I'm not super worried about it. We're looking at getting 250 shares for as low as possible, but if we're sub $8, I'm going to keep buying this one too, because sub $8 is kind of like a fill up the boat, fill your cart for me. That's something that I can look at and go, okay, well, this is easy to purchase. As we can see, Strive, not so easy to purchase because we are at an actual gain on that. It's not on sale for us. 21 Capital is on sale. We're down 15% from when we started buying. And obviously, this is the reason I don't dump money carte blanche into things that aren't producing, that I'm not doing for an income play, because this is down 15%. Fortunately, we only have 22 shares and we are going to get 250 shares. So there's plenty of sale room in here for me to continue to purchase, continue to buy, and bring down this cost average. Last but not least, in this portfolio, we have MSII, which is how we're saving up for additional shares of MicroStrategy by allowing the income produce from people doing covered calls on MicroStrategy at a higher level than what I could possibly do because I don't have time to pay attention to it. And we build these positions up until they get to the point to where we can pull the trigger and purchase an entire share. Or the way that it's been working lately, you only have to sell off a couple of shares to kind of round off the amount that you need. Granted, this last one, we had enough coming in, pulling the 10% off of our direct deposit into our brokerage account, into the primary income portfolio. We moved over. The initial 10% was enough to cover a share this round. So people are really concerned about the price. And I'm like, I'm actually not. I'm like, cool, keep it low because I can keep buying. I want my 10 shares back at the best price possible. So that's basically what we've got going on in the long-term holdings portfolio. Moving right along to the one that matters to everyone. This is the one that we're following. This is the one that we have the context on. We're moving into the primary income portfolio. This is the bread and butter. This is how I pay my bills. This is the portfolio that I am actively now living out of. Things we'll notice at the top. Market value, we're at 43,000. We have a target for this portfolio before we start really focusing and dialing in on the in-home banking portfolio of $60,000 in here. So we're getting towards that end. As we look through here, we bought another share because every time I get my deposit, I buy a share of strategy or of stretch period. So we're getting a nice little cushion of stretch in here. This is what I would consider dry powder or cash reserve position, followed up by blocks, which is another cash reserves, highly volatile dry powder position, but it's producing income. We will be dripping this up to probably around the $3,000 mark. So I've got about $700 more to put into this position before I start using it to pay margin versus leaving it on drip. Right now it is set to drip. PLTW is a position we sold off, but you can't sell fractional shares, so it is dripping until we get back up to a whole share so I can sell that. Semi has been the workhorse, and when we go to the context for this, you'll see why. We've got 480 shares of Semi, and it's paying well. Our target mark around is $10,000. I'm kind of working these positions to where I want my positions to be sitting at about $10,000 a piece, just to keep us from being overly blatantly exposed, and especially in the workhorse positions. I'm not looking to have over $10,000 in any one thing. After $10,000, I start looking for another position. Next up, we've got TSLW. We're still sitting on those 400 shares. The market has not been kind to us. With Tesla, it was doing well for a little while, kind of taking a beating, and therefore this is taking a beating. We're almost at a metric to where I either need to cut bait or start buying more. Maybe a little bit of both. I'm not 100% sure yet. Another cash reserve position that we've started, as you can see, as we're getting closer to the $50,000 mark, I told you the perspective's going to change. Like, we run it hot to get it set up, but we're starting to get some de-risk positions in here, and I'm considering that my cash reserve positions. So we are using TSPY, which is a monthly payer, not a weekly payer like everybody else in here, but so is Stretch. So Stretch is also a monthly payer, but it's doing really well. As you can see, it's the only thing that's actually in green. Now, we haven't gotten our first distribution on this yet, but I am building it up because it gives access to some margin. I would prefer to use their QQQ variant, but there is not margin with the QQQ variant. Both pay below what I like. But again, these are de-risk positions, so you won't see this as a primary because I don't consider this like a workhorse position. But TSPY, for those of you who are not in high yield, this is considered degenerate by people who buy Coke stock and consider that dividend investing. So, for those of us who are proper degenerates, it's not that much. but it still pays well, and it holds NAV and gives you the ability to catch some growth. So it's growth and income focus. So, like I said, as the portfolio grows, the perspective has to change, because at a certain point, as we're seeing growth over here and continuing to put money into these products, you kind of don't want to have all of your money sitting in positions where it requires you to constantly have a W-2 income. Now, for me, I'm going to be setting my existence up, hopefully, to where I will have the ability to produce some income in and of my portfolios and my holdings, my asset holdings, to continue to be able to feed these machines, to continue to grow them. But eventually you want to be in something like Stretch or a TSPY, like what we've got here, to where the volatility really isn't that much. It sits around $100, and either you're getting paid more money, or it's sitting at $100 and it's kind of like a really, really high yield checking account. And TSPY is kind of in that same boat. It's a monthly payer. It gives you access to get the growth of the S&P 500. Again, I would prefer to use their QQQ variant, but you don't get margin off of that yet. And if it does, I'll be switching positions. But that's the way that I'm looking at that. I'm kind of planning for the future, because while we'll be shifting focus from this portfolio at $60,000, the goal is to grow this as big as I can get it and then continue living out of it. So part of the system that I have set up will be dumping money in this portfolio first, and then moving stuff from this portfolio around as needed. Once we get our consumer debt paid off, we'll have a lot more flexibility with how we're navigating through these portfolios, but that's the goal. So I'm starting the de-risking process now, dipping my toes in the water, if you would. Next, we have our diehard, really has helped us jump to this point, TSYY. We did have a sell-off because it hit a sell-off metric. I didn't sell all of it, but we definitely started moving some funds around to reposition things. Now we have gone back to buying. Just because it's on sale, it pays well, it's keeping its high dividend. It's just the NAV is just eating away. And I think that the way that this is looking right now, my cut bait on this is going to be $4.50. Like, I'm not riding it below $4.50. I'm just not going to do it. I'll put everything in semi before I do that. And then pick another backup position to this. And that doesn't mean that I won't ever come back, but it's just where we're at in the market right now. This is one of the things that you have to watch with these products is I'm not writing this to zero. Like, that's just not the play or what I want to do. So, looking at this is paid well. It's done a lot of stuff to help us get set up for other positions. It's been paying off debt, which is what it's used for. These are highly volatile. I do not recommend going to zero. Me personally, I start selling chunks of positions off at unless it's a margin position at 5% of the at a 5% total loss. And yes, I understand. Oh, well, you're losing money. Well, that's what I mean. For me, breaking even or sitting at around 5% to get cash immediately without having to sell the asset is cost of doing business for me, because I run this portfolio very much like a business. So this position, when we go over to Snowball here to get the context for this, while this position is performing within the window that I needed to perform in, the NAV is being eaten at a rate that I don't like. Therefore, I'm like, hey, I have other positions that are performing better from a NAV perspective, that are paying more or as much or close. So I'm just gonna I'll start moving over to that. Like I'm giving this until $4.50 to get its act right. But like when we get down to $4.50, that will be the point where we'll cut bait and start looking at where we're going to re-enter back into this position. Should we? I mean, it just depends, because I'm not going to ride something through a reverse split either. Got to get out before the reverse. You can come back in after, but you got to get out before. Like I don't recommend that. Next up, we have WPay, which is existing by the grace of the amount of margin I'm allowed to have off of that position. Outside of that, it would be gone. And if I find something that's equal, it would be gone, because I could, any of the other cash reserve positions that I could roll it into, the pay would be less, and I would have less margin liquidity to have access to. And since we're living out of this portfolio, we are using the margin. Last but not least, we have YBTY. Obviously, been taking a slight hit as well. Overall, it's performing all right. The fund-to-fund idea, having the top performers, you're also getting the top volatility, which I am seeing now. But overall, it's paying well, and it's not swinging as hard as, for instance, TSYY, which is in YBTY. So there's that. We'll see what adjustments they made at the end of the month, because I think they readjust the basket at the end of the month. So we'll see what that looks like going through February. So far, I'm kind of meh with it, but it pays well. So it's staying because it's doing its job. It's a workhorse position. It is what it is. Now we're going to jump over to Snowball Analytics, which is where we give the context for the income portfolio. So let's go ahead and take a look over here. I'm going to close that. Boom. Okay, so we jump into here. We've got our Snowball Analytics. What I kind of like about this is it gives you the breakdown of the portfolio. So obviously we have it at 40,000. It hasn't updated the last buy, so it has $40,778.70. Before we move forward, the reason I show the actual portfolio before just showing Snowball Analytics, for those of you who don't know, or for those of you who are new to this space or running around finding different high yield people to talk to, I'm just going to put it out here that most of us aren't bazillionaires. So there's no reason to not give the receipts for your portfolio. The other thing is, with this, I can just make up a portfolio. Like I can just put stocks in here and fabricate the buys and make it look like I'm a genius and I never mess anything up and I'm a guru. And I could sell you a course that says, hey, Reckless Ray Dinero knows what he's talking about, so you should listen to him, because look at him. He's got perfect numbers. Or he's giving you a picture of a portfolio that maybe he would have had. This is my actual money, so these are my actual numbers. So I always do the actual brokerage first, and then show the Snowball Analytics. And like, after we grow it to a certain point to where the numbers are just so big that it can influence people, sure, I'll stop showing the portfolio and we can just run off Snowball Analytics, but there'll be plenty of empirical data to show that I built that money up and it's actually there and I'm not just making stuff up. So that's why I do that. Our total profit, we are at 1.3% total profit. That means factoring in the dividend distributions. A lot of people don't do that, and they just see red numbers and they're like, oh, well, you're just losing money. You're losing money. Well, if I was just indefinitely pouring the money back into the portfolio, that would be one thing, but I live out of the portfolio, so that those funds are actually going to pay down consumer debt. So that's an instant per the logic, not my logic. This is the logic of the gurus out there. Paying off your credit cards is securing a win for whatever that interest rate is. So that's guaranteed. For them, based on their logic. I don't look at it that way, but like based on their logic, that's a secured 22 to 25% right there, because I'm not reinvesting, because I have W-2 income that constantly flows into the portfolio and I invest all of it first. The other thing that we look at is our passive income percentage. Now, this is back in the range it needs to be now. Thank you. Of above 80%. We're at 90. I try to drive it between 80 and 120, which is degenerate levels. And I'll tell you why. Because I'm trying to replace my income so that I can not have to, not necessarily not, but not have to go to work in the next 18 months, which is the trajectory that I am on. That's so like I know when I don't have to go to work anymore if I don't want to. And in order to do that at my current salary, because I'm not a high income earner, I've got to run my portfolio hot. This is what happens when you can't just save money in the bank anymore. We all got to gamble in the market, and I figured out a game that I can at least semi-win at. So moving on, we'll go down here. As you can see, we are looking at, yes. So see, this is good. It's updating the numbers. So the projections that we've got, it looks like we're going to be back above $3,000 for the month of February. Thank goodness. And then it looks like we're going to be hitting a couple of close to $4,000 months. Now, these numbers go up monthly because I'm getting 2 to 3 paychecks a month of W-2 income. Also, if we break certain metrics, I have reinvestment triggers also. So like if we break, if we hit $800, I take 10% and it goes into long-term holdings portfolio. If we break $900 in a week, and this is based on the week, when we get to our $900 mark in the week, we will take 10% to the long-term portfolio, 10% reinvested into the income portfolio. And then when we get to 1,000, you take 10% long-term, 10% reinvestment into the income portfolio, and then 10% goes directly into buying direct spot Bitcoin. That's the way that I've got my system functioning. And the goal is to get to $1,000 a week for this portfolio. So like if I'm going to hit $1,000 a week, that basically will put me at about the $4,000 a month mark. And we've got 1, 2, 3, 4 that we're going to be close. And every month these numbers should be going up because we're building towards that goal. As it sits right now, it's got me at 66% of my goal because we're looking at producing $60,000 annually out of this portfolio. That was our original arbitrary number. And it's got us hitting that in 2027. I am hoping that over the course of this year, considering we're going to be fully invested, it will put us there somewhere this year, which was kind of what I was thinking, because I'm going to have about 80% of my salary goes directly into the income portfolio. Like that's the starting point for it. So we'll see what that looks like. Obviously, with the split of having part of it be the long-term investment, so that way we can work the margins and whatnot. That's also a variable, but we'll get there. And let's go take a look at the holdings. So as we can see with blocks, we are down 17% in total profit, but we probably won't be doing any massive sell-offs for this because this part is highly volatile. We'll just keep buying and leaving it on drip at this point. PLTW, that's not actually in there, but we're only down 1.29% on that one. Semi, which has been a beast, we're up 2.87% total profit. STRC, we're basically flat on that, down 0.51%. TSLW, we're down total profit. We're at 4.28%, which is it's above the 5, but Jiminy Christmas, like we're about to have to start turning on the spigot and buying more TSLW, I guess, because we want to catch that upside when Tesla goes up. TSPY, we're up 1.26%, which obviously we're just holding those shares right now. We haven't gotten any distributions yet. Yield boost, TSYY, context for that, we're down 2.16%. Like I said, this is performing well. It's the NAV specifically that's the issue. That is the issue. And like all of it is the NAV on this. Like you're getting a good deal for what you're getting paid. It pays 141%, but I'm not willing to ride 141% to zero, especially when we have Simi up here that's paying 143%, and it's more or less running flat. Like I like that better. So from a NAV perspective, 450 is our drop bait on TSYY, and we'll pull and reevaluate where we need to be there. WPay, total loss 13.56%, but we're actually utilizing the income, so we're not buying anymore. I'm actually probably going to try at some point to purchase those last 5 shares to make this an even 200, just because I like even numbers. But if this wasn't giving me so much marginability, it would be out of here. It just really would. YBTY we're down 7.33%. This one I'm giving a little bit more grace to because we're fully positioned now, but we're gonna continue buying this. So like we'll probably get this to about, it's 100%. It is giving 100%, and it's less volatile than the other ones, but we're not at $10,000 yet. So like there's still more to buy, but actually the moral of the story is there's still more to buy here. It's just I buy this slowly because Simi is doing so well and TSYY is such a good deal. It's kind of frustrating, but as we buy, we're dragging this rate down, and it is running more or less flat. I just don't like seeing the NAV go down because like under 450 and you're looking at reverse split range, and I don't want to ride a deal through a reverse split. Like I don't want my position reverse split, so that way we can start this all over. I like it from the rate that I like it, and like maybe the sweet spot for me is around $10 down to like 450. That's the sweet spot. Like if it pays high and it's between $10 and $4.50, I'm like, hey, I can work with that. But we'll see. We're keeping an eye on it. We are watching it like a hawk. But that's what we've got. That's kind of where we're at. Let me pull this down, bring me back to the screen. That's where we're at. That's what we've done over the month of January. I'm not complaining about it. There was some interesting things going on with the debt and how we're structuring and setting up now, but I think I've worked the kinks out on that. I really do. And so moving forward, it should be semi smooth sailing. Maybe the best way to put it, I guess, semi smooth, because there's going to be some kinks. Like I'm still trying to figure out what I need to do with my with some of the income that I have coming in, like specifically income that comes in and then goes out immediately. Like it's starting to make me wonder if I should just go ahead and pay those things early as opposed to putting them in the portfolio. But then on the other hand, it's like, well, if it's sitting in the portfolio, it has the opportunity to produce some income for you. So there's that. I don't know. There's just a lot of interesting things going on where you want to be able to make the most of something while also making sure to handle your responsibilities. We're gonna leave it on that. We'll see what we do with the month of February. It's looking like we're currently being projected to produce a little bit over $3,000. So we'll see how that goes, because week over week, it improves a little bit. Every 2 weeks we get that cash infusion. So there's that. But also February is notoriously bad for the markets in general. It's a rough month for the market. So we're gonna be fighting it out the whole month. And I'm here for it. I love it. It's something that I nerd out about. So I'm ready to see what the month of February brings to us and this portfolio, and see how well we can do, like if we can beat it. Because at the beginning of the month, it's projecting $3,100. So that's the number to at least hit and or beat. And I'm hoping we beat it. Till next month, it's your boy Reckless Ray Dinero. This is Future Financial Strategies, and this was the portfolio update for January of 2026. Do not forget to hit that like button on your way out. Thank you for those of you who've made it to the actual end of the video and are seeing this and listening to my rant for all those times I was ranting. Lastly, also, don't forget to subscribe, especially if you've been here more than twice. And the third thing that I request specifically of those of you who have already subscribed and are part of the Wolf Pack, go ahead and share the video. Get me out there in the algorithm. Till next month, people, it's your boy Reckless Ray Dinero, and I'm out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.